Hello and welcome to another video. Today we want to do something different. We want to take a look at how you can actually recognize a trend change when an impulse is technically complete. So what we'll do, we'll take a look at the NVIDIA chart. You can forget completely that it's NVIDIA. It could be any stock, it could be any cryptocurrency, any asset. It doesn't matter at all. This is literally just because we had a good example. So I chose NVIDIA because it's a nice impulse to the upside, and I want to share with you the different steps that I go through when analyzing a chart that will tell me when or if a trend is complete. The video content that you see is actually part of one of our recent membership live streams. Every Sunday we run a membership live stream. If you become a member, you can find the links in the description, then you can participate in these educational member live streams every Sunday. So I thought I'll try something new. Let's see if it can help you, and let's go. Let's take a look at the structure from the October low, October 22 low. And let's go through the steps how you can identify, or how we can, as Elliott wave analysts and traders, identify a trend change. First of all, this is an impulsive count. I mean, the first step will be to label it. Obviously, we have on this chart already the wave labels. It is the NVIDIA chart with a 5-wave move up from the October 22 low. Wave 1, wave 2, wave 3, wave 4, wave 5. Now you might say that's enough because we have 5 waves, so shouldn't the uptrend be over? Well, it should be, but it doesn't necessarily have to be, okay? One of the biggest mistakes people make when they analyze with Elliott wave, or rather trade with Elliott wave, because the analysts usually know, but it's more like when you trade with Elliott wave, you have a potential, which means, okay, the trend is likely over, or we are close to a top. That's really all it means. We are close to a top, that people go short prematurely, okay? The trend, however, is still up. So you don't want to fight the trend. I think one of the biggest mistakes is to try to guess when a trend is over. Well, you can guess it, but you shouldn't really act on it until the market has at least given us some confirmation that a trend is over. So we have a wave count. So we know already, okay, that the trend is likely over or nearly over, and NVIDIA is obviously a prominent example, having so much definitely in the focus at the moment, and it's very much overextended. Okay, the next step would be, once we have labeled it, to go into the micro patterns, especially here that 5th wave to the upside, which is obviously then the last wave up, but we also need to be able to label the waves within that 5th wave. And here we get another 5-wave pattern. So we have a wave 1, a wave 2, a wave 3, a wave 4, and the 5th wave. So now we can visually determine, okay, and that is a bit subjective. So we don't want to use that as unique, or as, let's say, the sole signal. We want to have further signals and indications. But you could say, okay, I've got 5 waves up as well, so the top might be in. I've labeled that already as alternative wave 3 might have topped. The overall wave 3 in which we're moving could have topped. But again, I need further confirmation. If we then take a look at this 5th wave, again, it's all about getting into the micro counts, at least to the degree where you can still count it, because at some point it will just get messy and you don't really get any reliable patterns anymore. But if we then zoom in to that 5th wave, we can also say, okay, and you can count all of this, but at some point it just gets too messy. So we want to have further and additional methods to determine if a top is formed. But also here we can say, okay, 1, 2. See, this looks rather like a 3rd wave. And again, that's to a degree subjective. It's definitely long enough to be complete, okay? But visually, it might need another 4-5 pattern, or at least we could allow for another 4-5 pattern. So zooming in, into the detailed wave count allows us to determine, okay, we might get one more high. Now, that information alone doesn't really help us. Would that mean we go long now? But where, So we want to identify in the next step the relevant support zone. So the support zone is here measured, especially because this is impulsive, by taking the length of the 3rd wave. So from the beginning of the wave 3 to the top of the wave 3, the top of the presumed wave 3. And then for a 4th wave pullback, because we can allow for one more high, it's typically the area between the 23.6 retracement and the 50% retracement. So really, as a solid signal that a top has formed, I need to see a break below that support level. And that would be really a strong signal that a top has formed. An even better signal would be a break in 5 waves. So you see that highlighted in yellow, what it would look like if we break this in 5 waves. Because if it's only a 3-wave correction, A, B, C, especially if it doesn't even break below support, it could still just be a 4th wave with one more high. Generally, when we have a very, very strongly established uptrend, if the movements to the downside are only in 3 waves, and if they don't break support, there is no confirmation, nothing objective to say a top is in. We can watch for a top, but until support breaks, there is no confirmation at all. So that needs to be broken, that support level here, the 50% fib level, and ideally it breaks even in 5 waves. That would be a really, really good confirmation. Any questions about that? Let me please know. But that's not everything, okay? That's not everything. That's purely the wave count and using Fibonacci support. So what I sometimes do, and this is especially useful when it comes to impulsive patterns, we can use something that we call an impulsive price channel. So how do we draw that? An impulsive price channel is basically you connect the waves 2 or the wave 2 and 4 together. Now you can either draw just parallel lines or you select, we select the parallel channel from the TradingView toolbox here. We start at the low of the wave 2 and we go to the low of the wave 4. We draw it to the current price and then we get a parallel channel. And then we move it all the way up to the top of the 3rd wave. So that we only have one touch point here, the top of the 3rd, but the waves 2 and 4 are connected. And this is where something interesting comes into play, because it takes a break usually of the lower boundary line as well for another indication that the top is in place. So especially in this example here, that's pretty much where the 50% retracement level is located as well. But there is something else. There is something else. So when we deal with a structure like that and we are close to a top and we know we are like in the 5th wave, you have this 5th wave which started here on the 22nd of April. And you have something in this channel that's called a center line. I don't think I've ever talked about that concept before, maybe in a member live stream or so, but center line can be an early indication that the top is in place, because what we normally want in a 5th wave is that it pushes above the center line. And you can see it's doing that, right? It's pushing above the center line and it's now come back to test the center line. Now a break of the center line could cause us to watch it closely. I think alone it won't be enough of a confirmation that a top has formed, a substantial top, but it will be probably the earliest indication we can get, because all it's done so far, it's pulled back into support. And a sustained break of the center line is definitely the earliest indication. Then we can see if support holds. So that's important as well. And then obviously what we shouldn't forget about are the relevant Fibonacci levels. Now we can see it visually here that Nvidia has basically reached all the upside expectations. I mean, based on Fib levels, I mean, what are typically key Fibonacci levels to watch? Well, a key level is, for example, if we take the length of the wave 1, we usually say a 5th wave should reach the same length as the wave 1. Well, guess what? It's way overextended. Whenever we see an extension of the 5th wave, I'm talking about the 5th wave here from the April 24 low, it can make, I mean, you can use further extensions. You could use the 1.618 extension, common as well, but even that's broken. But then it can make sense to take a look at the other alternative calculation method, where we take the length of waves 1 and 3 together, and then we go to the low of the wave 4. And it's typically the 61.8 extension that's relevant. Sometimes the 38.2, but that's probably too low in this case. 38.2, 61.8, and if it's extended, the 78.6. So you can see it reacted to the 61.8 extension at $132. What I'm trying to say is you have a wave count that's full or nearly full. You have the Fibonacci extensions that reached all targets, even a bit overextended. So we are on high alert that a top could be in. We have the center line that might get broken, which is the next indication that, a top could have formed. And then we're watching support and the structure to the downside. These are really all the signals that you need. If then support breaks, okay, at least the center line, at least, if the upside targets are reached, that allows you to take profits, partial profits. If then, for example, the center line breaks, you have the next level of confirmation. It's a warning, an early warning. But if then support breaks, especially if it breaks in 5 waves, I mean, that's all you need. There is not more confirmation the market will give us. Remember, the market will never give us certainty, but it will give us that confirmation. And there is not more than that. If we then go further, and I don't want to make this much longer, but if we say we have, okay, let's assume we break support in 5 waves. Yeah, okay, does that mean you're short at the end of the 5-wave move down? Typically not, because the reward to risk ratio isn't great here. If we have a 5-wave move down, we can set a stop above the high. Okay, because that would we could call that a wave 1 to the downside, or an A wave even. And then if we get a 3-wave rally, that could be a wave 2 or a B wave. But you could then identify resistance and short as we're rallying into resistance with a stop above the high. But only if we have a break of support, a 5-wave move down, and then a rally into resistance. And that gives you a short trade setup. And then does it mean it can't break? No, it could still extend higher, that happens. But at least you have parameters to watch, and you have all the probabilities on your side. But it's still only probabilities. It's never certainty. That should give you everything you need to identify a trend change. Obviously, there is more to that if we talk about diagonals, but again, I just want to keep it simple and talk about impulses because they are the clearest trends. So we should talk about, okay, how can we determine that such a trend is actually changing? Okay, so that's it. I hope you know now how to identify a trend change when you're dealing with an impulse on a chart. And as always, please leave a like, comment, subscribe. Let me know in the comments if you like this kind of content. If you'd like me to recycle some of our live stream format from time to time for you. And as I said, if you're interested in more educational content, if you want to learn about Elliott Wave, trading, technical analysis, check out the membership. And there's plenty of educational content there for you. Thank you very much. Bye-bye.